Credit is simply finding the companies that are credit worthy and highly rated and low risk of failing. At one point that was Blockbuster, but you got to look through the trends to see what it is. There was a time when Amazon was a name nobody knew, right? Everybody was buying their books at Barnes and Noble. So it's the solid companies with solid balance sheets and income statements that are most likely to pay your rent. The rent is a very small element of their overall structure, so you're not going to burden them with too much rent in where you're putting them. So credit is important. Cash flow means you go in and you buy something where you're getting a high current cash flow for whatever reason. Perhaps it's slightly above market rent, but you believe the rent's going to be going up to that level, or there's some sort of other element that provides more cash flow. Cash flow can get you through a bad time. If we're slightly wrong on an office acquisition, I want to make sure that we have the cash flow to get us through 6 to 18 months to right whatever wrongs we come across, or what the market does to us, or a pandemic, or whatever it might be. There's always a shock coming, and cash flow can help you deal with that shock. As an HFF broker for almost 20 years, we've been dealing with debt for quite some time. I remember doing conduit loans back in the 90s at 11% for apartments. We're borrowing money today at 2.5%. So the cap rate compression has been very aggressive. So, you're buying, you used to buy things on 10, 11 multiples, depending on the asset class. Maybe they were 14, 15. Today, you're buying below 4 caps. That's over a 25 multiple on investment. So the positive leverage is critical to be able to create cash flow. So the cash flow is really created by borrowing 65% in most cases at 2.5% when you're paying 4% for that cash flow. So the leverage creates the cash flow. And if you can buy something at a 6 or 7% cap with that same 2.5% leverage, you're creating a ton of cash flow. So that's what we look at in our light industrial program. We're buying on 4.5 to 5.5 caps, depending on the market and the makeup. The apartment world is, 4 cap is a high cap rate in most markets. So we're really, struggling to find the deals that make sense that have the right amount of value add. And office, so far, we haven't seen many transactions trade. It looks like the debt is still very efficient on office. So to the extent we can find some of the higher cash flowing assets, borrow money at 2 to 3%, that's where we create the cash flow that's above what we would find in other asset classes.